Morning everyone, my name is Jason Berry, I'm Group Sales Director at Crystal Specialist Finance, and have I got a Christmas cracker for you. Today I'm joined by two of the most recognised leaders in the distribution space, and over the next 30 minutes we'll be reflecting back on some of the challenges faced during 2023, but most importantly we will be looking at identified opportunities which we believe will exist in 2024. I will also suggest some actions to capitalise on. So may I start, ladies first, with the intros. Hi Vikki.
So Vikki Jefferies, Primis Mortgage Network. I'm Proposition Director, looking after all the lenders and providers. And product governance, which is obviously delightful in a post-consumer duty world.
Thanks, Vikki. And next I'll go to Martin.
Hi, I'm Martin Reynolds, CEO of SimplyBiz Mortgages. So I run the mortgage club that works with the directly authorised market.
And look, firstly, I've got to really applaud you for making the effort along with myself with the Christmas jumpers. So thank you very much for getting on theme for today. So starting with the first question then. So obviously would like to reflect back on 2023 and really just have a look at the key trends and developments that we've actually seen. But obviously there's been a couple of, there's certainly been some biggies as we've gone through the 2023 year. So just what factors have had the most significant impact to Primis as we've gone through 2023, would you say, Vikki?
So, I mean, let's start with the regulatory landscape. I mean, obviously in network space, we dealt with AR regime at the start of the year, obviously less so for Martin, but for myself and other networks. Whilst that wouldn't have been outward facing in the market, for a network, that was quite a lot to go through and some requirements on ARs that sit within networks. So that was significant. Then, of course, we moved into our favourite topic of the year, consumer duty, which, probably the biggest regulatory change in recent years, meaning that, all of us have had to overhaul processes, procedures, governance, etc. So that's been significant and, kind of distracting in terms of, setting things up, to move forwards. And all of that with the backdrop of market conditions, which have, been difficult, let's be honest. We came out the back of 2022 in very difficult pricing scenarios. And that volatility has continued throughout 2023. And, whilst we've been managing with, lenders and the pricing and all of that, I think the biggest thing that sticks out for me is, the type of customers that we've been managing. Our brokers have been dealing with very emotional circumstances with customers, really difficult conversations that we've not had to have in recent years. And, notwithstanding, that's been really challenging and made a really difficult advice process with new regulation even more difficult. And kind of exhausting. I feel like it's been an exhausting year for brokers with all of that going on.
So bring on Christmas, right?
Yeah, I think, I think 2023 has probably been one of the most difficult years that I can remember for all of those reasons that, I've just outlined, really.
And I think, when we've all been in the industry for a period of time, and you go back 3 years and we were talking about unprecedented times with COVID and stuff, but just when you think you've seen everything and something else seems to appear. And I want to talk about maybe how you've successfully overcome some of those challenges in a few moments. But I'll just move to Martin. Probably the same question then, really, Martin, in terms of just how SimplyBiz have dealt with the various things in terms of factors that have been thrown at you as you've gone through this year.
Yeah, obviously the things Vikki said as well, but I think if you go past that and maybe into the next level of detail, I think it's the continued move to product transfers. I think that's caused a challenge. I think the affordability challenges that make that happen of being a big issue, and we might be seeing a little bit of easing on that as we move towards the end of the year, but it's definitely not going to go away. I think the rate changes, blimey, it feels a long time ago now that we're getting rate changes with 2 hours notice, but that was still this year. And I think that was a challenge. And I think we're now actually seeing a bit of a challenge the opposite way, with rates coming down and maybe the unintended consequences of what the mortgage charter brings in as well. So I think all that happens is it always sits in the middle, though, with a mortgage broker. So the lenders do changes, doing whatever they need. The customer's just looking inwards, going, what's happening? Who can help me? And ultimately, it's always the mortgage advisor that sits in the middle that that takes the challenge from both sides and shows its resilience, to be honest, to get on, does the job, and does the best for their clients.
Yeah, and look, we talk about that emotional journey we take the clients on, and look, there's no perfect pathways. There's always some bumps in the road. But when you throw in, as again, you've touched on there, some of the hurdles that have been put in front of the advisor. I suppose we've had some very frustrated and very mentally challenged ARs at times. What about successes then? So we spoke, Vikki, then about the challenges we've faced, and we've spoke there about this the product transfer focus, and inevitable focus is needed to be. But how have you found the advisors adapting, and are there any, I suppose, specific success stories you've got on the back of having to emerge through all this change?
Yeah, I mean, talk about adapting. I mean, it's been changing throughout the year, hasn't it? I think where we've really added value as a network is really in giving that true support service to our brokers. So, where Martin's talking about rate pools within 2 hours, I'd kind of erased that from my memory, actually, Martin, but you've reminded me again. Really having that service, that close relationships with the lenders to make sure that brokers have the most accurate information. Working with the sourcing systems who, they've had their challenges throughout the year, and really working to improve their SLAs so that, our brokers have the right tools. Because I think that's been the critical thing when you're dealing with this fast pace and emotional customers, different products, having that back end service and systems that you can rely on to source and provide advice in as accurate way as possible has been really, really important. So we've had a lot of success in that service side and improving our SLAs and working with our suppliers to improve those SLAs as well. And then I think one of the other things, just going back to consumer duty, we flipped around some of those things as opportunities. So, talking about the advice process and, how we bring protection into that, and thinking about the opportunities that these regulatory changes bring about to breed more success and provide enhanced revenue opportunities for our firms when, product transfers don't pay the same. That's a fact. So looking to improve those revenue opportunities. I think really the word I'd use is about giving that agility to firms. So being able to pivot and be agile depending on what's happening in the market and what each customer presents in every meeting. What are all of those opportunities? And where we've come in is providing all of those solutions to give that infrastructure to be able to be agile in those situations.
Amazing. And look, delivering an outstanding outcome, a brilliant outcome, and looking after the customer for longer seems like it's just common sense, doesn't it? And I know with consumer duty it's become more explicit. How have you seen in the DA space, Martin, from a behaviour and a maybe positive change perspective? Because again, I know you've always been an advocate for holistic advice, haven't you? And have you seen the DAs adapting in your distribution?
I think for us it's been interesting watching it, and I think for us it's all been about communication. I think the advisors have wanted to know what's happening, some third-party advice and guidance on there. Because I think they've been confused as well as what's been happening in the market, and then the end clients have been even more confused. So what we've tried to do is lots of webinars, lots of meetings with principals, lots of events where we get that information out quickly, timely, out into the market, even if it's just thought leadership around this is where we think the market is going, this is what the economy is looking like, just so the advisor just feels equipped to at least be able to give the same sort of advice and communication out to their consumers and their clients. Because I think at the moment, I don't think you can over communicate to your end clients. We saw it in COVID. People just want to know what's happening. We know that there's people who've at the start of the year probably had a product transfer or remortgage opportunity that's not until the middle of next year. But 18 months away, the customer was a bit worried about where rates were going to be. So we've been saying, you need to talk to them, you need to communicate, you need to give them help and guidance about how to prepare for what's coming. Because as Vikki said, it's that hard conversation at some point is your rates are going up. Whereas probably for the last sort of 6-7 years, it's been very much there's some new rates out and they're lower than what you've got, which is a lot easier conversation than your payments are going up £500 a month. And can we talk to you about protection at the same time? So they're all about the skills of how to communicate for me and how to get that information out to the clients to make them, one, feel at ease, and two, know that the broker's got their back, and that when they start getting things from lenders, they come back and talk to their advisor and say, I've had this, you've been talking to me for the last 6-12 months. What shall we do next?
That makes sense. And Vikki, I suppose it comes back to this, again, this education theme that we were just touching on there. I know it's something that you're really, really passionate about. And I suppose getting the message out to your distribution around the opportunities that exist maybe in the specialist market. I know you tend to look beyond that transaction. So this isn't all about trying to find a price or a criteria solution. I know you work hard, don't you, to really try and help the advisor understand where they can prospect, where they can get business from. So I'm just interested, without giving away the keys to the safe for your plans for next year, just some of the ideas that you've got in terms of where advisors should be looking and maybe what they've got to do behaviour-wise to seize the opportunities that'll be around next year.
Yeah, so I think before anyone goes out looking for anything else, one of the key things that brokers need to do next year is secure their existing client base. So we know that next year is pretty decent again in terms of maturities. We've got peaks in April, July and October. So really businesses need to forward forecast, get hold of their data and figure out what they need to secure. Obviously the April ones need to be secured now. So it's about understanding that base on maturities. I think there's a real opportunity for firms in their local environments, those that work in local communities, to actually take some of the maturities off maybe other businesses or other brokers that maybe aren't as good with their data and managing their data by promoting out. And as you know, social media is a great vehicle now for creating that, making yourself the business of choice in your local area, obviously getting referrals, etc. That's really important. I think, this is the key with specialists, and it's always been the thing that we've always battled with over the years, is that in a busy market, brokers go, oh, I'll just go back to my product transfers and I'm not going to deal with that customer. That's a really difficult customer. I don't think businesses will be able to do that, because I think we're going to have still the start of the year is going to be quite difficult. I think I'm an optimist, so I've got high hopes for H2, but I think we should be realistic in terms of H1. So I think everybody is going to need to consider those tricky customers that are going to be coming in the next few months. And I do genuinely believe that we haven't really seen the full fallout of people's financial difficulty. I mean, you and I have spoken about this, Jason. I still think that there's a lot of customers out there that have cruised on an overdraft, cruising on a credit card, are sort of funding their way through, but reality is probably going to bite for them in the new year. So I think we are going to see an uptick in some of that adverse, and some clients that are going to probably be in a different situation than they would have been 12 months ago. So I think that's really important. But I guess some of the brokers out there will be thinking, but I don't do specialists, I don't like it, I'm really uncomfortable with it. And I would say this is really where you need to be seeing your lender BDMs, you need to be engaging with your packager partners, you need to get yourself on the webinars, use this quieter time up until the end of the year and early part of January to really get your education levels back up, understand the products, understand the structure of the products, what they are, what they do, use your network and your club events, because knowledge is power, and having that ability to be able to articulate to your clients is going to give them the comfort and support to be able to come up with the right solution for them. So I think we do all have to, with 130 lenders on panel, hell, you're never going to be able to remember it all. But by getting your education as well as you can and using packagers is obviously a huge advantage for when, those customers come in, which inevitably they are going to.
Yeah, look, I think a couple of things there. And obviously I'm biased about the packager point now with my crystal hat on. And I just believe passionately in consumers getting advice. And as you touch on there, it's incredibly difficult for advisors to be experts across all the various verticals that exist. And, for a business like ours, where, we've got that bridging commercial and complex buy-to-let focus, we've got expert teams in each of those verticals. So all they do all day, every day, is deliver bridging solutions, deliver commercial solutions, and we don't cross-pollinate in terms of the skills. So we keep them as experts within that vertical. And I think the other point which you touch on, which is absolutely true, history suggests that people have poor credit and unfortunately self-employed get marginalised following events. And we've had some unprecedented events over the last 3 years, which are undoubtedly going to mean that, unfortunately, HMRC will show the teeth, and utility bills and some unsecured credit payments will just get missed. And I think what all of us understand is that the lenders are actually probably the best place they've ever been. They're well capitalised, they're liquid, and the best place than ever to actually deliver some of the solutions. But I just wonder, outside of the specialist space, Martin, in terms of opportunities, I know we touched on before maybe cross-selling and the goodwill that exists once you've actually completed the mortgage. Just where else do we think advisors should be looking for opportunities? So specialist market, undoubtedly, partnering with third parties who can deliver some expertise in that specialist space is something that I'd obviously be a big fan to promote. But where else do you see opportunities for advisors next year?
I think a lot of it, though, is still in those areas. I think Vikki touched on it. Have you worked through your existing client bank? That's a number of things. That's not just the product transfer.
Yeah.
So we're at about 92% of all purchase and remortgages done through the intermediary market. We're still only at about 55% of product transfers going through the intermediary market. So that's a lot of customers still that we will have put to the lender in the first place are still not coming back at that point. So we need to get better at that and be honest with ourselves as to how good we are and what we do. But then also you touched on specialist lending. It's again still understanding your client bank, not always looking for the new customer. So how many of your customers are self-employed? How many of them actually own companies, limited companies? What else do they need? What else can you help them with? And again, we set up the Specialist Property Finance Club a few years ago that brings you in those lenders that maybe don't sit on a normal panel because of their sort of niche area, and probably a lot of the ones that you deal with as well, Jason. So, we've tried to get members to get used to those sort of products and the education that goes. And also the referral aspect is if you identify but don't want to do it, fine. You send it to somebody like Crystal, etc. It's being able to recognise within your client bank those opportunities. And that referral bit, I think Consumer Duty's brought that in with regards to general insurance and protection. You've got to have a consistency of process. So if your protection's at about 15, 18%, should you really be doing it yourself? Are you doing it correctly with every client in the same way? If not, then refer it out. Refer all of it out. And you'll probably earn more because you're probably going to get a higher penetration rate with the specialist doing it. But you're also giving every client the same process. It's back to that bit that says you can't be experts on everything, but you can know what to do with everything and how to position it. And the position is, I'm an expert on mortgages. I'll pass you on to my expert in protection or general insurance or specialist property, if that's the way you want to go.
Yeah. I mean, to use like a sporting comparison, sporting analogy, it's almost like advisor acting as the quarterback. I hope you don't mind this, Vikki, but acting as the quarterback. So the facilitating, the coordinating the movement and the coordinating the solution that actually exists. So they're not having to always deliver the play themselves, but they're coordinating and facilitating. I've got a brilliant case study, which I hope you don't mind me indulging everyone on, because it just has delivered an amazing opportunity for us. So Mark Hutchins, who does some project work for us, and is actively, he's been actively collecting renewal dates and speaking to advisors prior to the renewal date to make them aware if it was a buy-to-let portfolio that their portfolio needs some insurance. So he's been supporting the advisors with just nudging and prompting when there's a piece of work or an opportunity that exists. And just a couple of weeks ago, he nudged one of our brokers, and there was a small portfolio of 12 properties that needed insuring. So just the insurance was due. When he was chatting to the broker made contact with the client, and the clients ended up coming back to the broker, and these 87 properties that he wants to refinance. Now this conversation may have occurred, but it may not have occurred if we've not been speaking to the broker about the applicant about that general insurance. So I suppose having a focus on the right customer outcome and doing the right thing at the right time and just creates opportunities, I think is the takeaway from a few things we've said there. But I'll summarize a few of those towards the end. So I'll move on a little bit and just talk about technology and the part that's playing in the marketplace. So AI seems to be the buzzword at the moment, and seems that there's opportunities to actually implement and use AI. But I just wonder about technology and the part it's playing. I know we mentioned the sourcing 27 Tech and Mortgage Brain a little bit earlier. So just technology, if I start with you really, Martin, if that's okay. Just wondering, I suppose the part you see, maybe not necessarily AI, but just the role of technology as we go through maybe the next couple of years.
I think technology is at an interesting place. We've been saying it's on the verge of it being perfect and what we want for a number of years. But I think what we're seeing now is they're all talking to one another, and I think that's really good to see. I think everybody's trying to work how can they collaborate to get this better end-to-end journey. I think we saw pre-COVID everybody was fixated on how can we press a button and get it through to the lender and there's no rekeying, whereas during COVID, it went back to the start of the process and what's the criteria and what's the affordability, and can this customer have a loan full stop, let alone how do we process it? So I think that reinvigorated that end-to-end process, and we're starting to see a lot there. I still feel that the adoption is low as to where it should be, especially the bit where we are getting that integration with lenders. People aren't using it. I don't think there's a clarity there. I think we're getting told that somebody's got an integration, but we're not always sure whether it's DIP, whether it's app, whether it's case tracking, or whether it's all three. So I think the advisors, when you talk to them, or the admin who are processing them in most cases, going, well, I'm not sure, I'll just carry on doing what I'm doing. So I think as technology partners, lenders and distributors, I think we've got a part to play to create that transparency and clarity of what's out there and how it does. But it's an interesting space, and there's still a lot of players in the market. If you look at across into the IFA space, it's consolidated a lot over the last 10, 15 years. We're still seeing every 2 or 3 months a new CRM partner appears on the market in the mortgage space. So it still seems to be a space where people are jostling to get their views heard, but it feels as if it's getting a bit clearer.
And would you echo that, Vikki? Because again, I know technology as an enabler is something you've been really passionate about. How do you see things playing out, and what's your current view?
I think it's really, really hard for firms out there to understand which systems to align with and what their strategy should be. Because I think Martin's right. We do have an amazing amount of choice now. But it's hard to understand, particularly with the CRM systems, what's got longevity, what hasn't, and which ones to back. And I think also the important point now in our marketplace is that there's so many variety of firms. If we went back maybe just even 10 years, the variety of firms, it would be maybe 2 or 3 different types. But now there's endless different setups in firms. So I think it's about, as a business owner or an individual broker, it's about thinking, what does my business need now? And also, what does my business need in the next 3 to 5 years to try to help to determine the decisions to make? Because it's, you've got to think about how you want to, where your clients are going to come from, what your lead source stuff looks like, as well as the ease and efficiency in terms of processing applications. I don't quite think that the solutions out there in the marketplace are there on the efficiency point yet. I think we've still got a few blips that we've got to overcome. And I think that's one of the critical things for me in 2024 is getting that seamless process without the blips, without the need to have manual intervention. Because unless we get that seamless process that people can rely on, we're never going to get the adoption rates. And without sort of, having that significant adoption, you can't scale things up, and then you can't get everybody on board. As Martin said, it's about the collaboration. But I think at the moment, there's probably some poor experiences for individual firms, which is making them a bit reticent to sort of go with some of the systems at the moment. But I think it's a really exciting time. But, I was looking at a list I had the other day. I've got like 15 different options, and I'm like, okay, so where do you start?
Absolutely. And look, it's not hugely complicated what an advisor's looking for, is it? Certainty of decision, eliminate rekeying of information, and just have a consistent speed as we go through the journey. And agreed. And then I suppose, without wishing to go back onto Consumer Duty, because again, I know we touched on that at the beginning, just interested in if there's anything else coming up the track. So is there anything risk-wise or anything regulatory change-wise as we go into 2024 that the advisors need to be aware of? So is there anything else coming up the track, or is it just a case of, look, just embracing this Consumer Duty, this customer outcome focus, and this consistent interaction we want with customers? So, Martin, I ask you that, if that's okay, because again, I know you've got such a strong compliance focus with your DAs. Is there anything else that is coming up the track that we can see, or is it just a case of just making sure we really deliver some brilliant outcomes?
I still think there's a lot. I think Consumer Duty was the start of the journey, not the end of the journey when it came in in June. So I think there's a number of things that will still need to happen over the next 12, 15 months as people embed it, people get used to doing the reporting and working what to do with the reporting and the data they get. So I think there's still some way to go on that as people embed it as a natural thing. I think the fair value pricing, both there and GI, the regulator's been looking at that. So that's going to come through. And they've been very clear on their view on the equity release market and the later life market over the last few months. So again, I think that's going to flow through, and I wouldn't be surprised if they do another review on that in the next sort of 12 months, and secured loan second charge as well. I think they're looking at the products that I'd say are on the periphery of the norm that a broker would do, and they very much want to make sure that those processes and the clients are getting the same level of advice and quality that they're getting for a normal residential mortgage.
Yeah, look, that seems to make sense. And is that what you're seeing as well, Vikki?
Yeah, definitely. I agree with Martin there. I think the regulator's going to come back with some additional reviews and some more areas of concern. There's also the back book reviews that need to be done as well. And I think that the thing with Consumer Duty, we only sort of really started it in July, as Martin said. And I think particularly for larger businesses, we've still got this point on getting the right culture, which isn't something that you can just do a tick box on the 31st of July. It's about embedding that culture through all layers of your business. I think it's about having a really strong governance framework, and not just written down on paper, but seeing that in practice. So how are you identifying the trends? What are you seeing? And most important, what the regulator is going to be looking for is, and what are you doing about that, and having that documented. And I think that's only something it's going to take time to get all of those things embedded into businesses, but ultimately that is what the regulator is going to be looking for. So I think we've all got a long way to go in that. Obviously on FVAs, we're just about to do the second set on the GI and protection market. We're at the anniversary for that. And certainly what I see, is there still more improvements to be made? So I'm expecting the same from the lending products as we start to get to the 12-month anniversary of that. And I think just the final point in terms of CRM, but remembering Consumer Duty, your data is king. Having a strong set of data that really articulates your customer outcomes, that's measurable, is really, really important. So I suspect there's probably some of us that still need to do work on our data sets to be able to really drive in those outputs from the MI that we're going to need to fulfill our governance framework.
Yeah. And if there was, I'm conscious just before I summarise and cover off today, if there was one thing that we would really endorse and recommend a broker does focus on next year, what would that be, Vikki?
I think as business owners, I think for 2024, it's really important that you understand and have a 12-month and beyond forecast in terms of what you think your business is going to need, what is your base income, and therefore what other opportunities you need. I think working on the business has got to be one of the really critical things for next year, just to get us through this prolonged period. And then also to have really strong businesses that have that agility to be able to react as soon as the market comes back, because purchase will come back. And it will come back with a bang, because I think there'll be a lot of pent-up demand. So it's gearing up your business to sort of get through the next few months, but equally be agile enough and ready for when the market comes back, so that you don't miss out on any opportunities.
Excellent, excellent. And Martin?
Yeah, I think that working on your business, not in your business, is hard. And having a look around of what's there, you know, what the economic challenges, we're going to have potentially a change of government moving forward, and everything that goes with that. We're probably going to have another budget that could well be some more giveaways and something for housing, which we didn't see the other week as well. And I think it is trying not to compare year on year on everything. So if you look through 2021, 2022, they're the two biggest years that we've had since 2006. This year is going to be less in 2023, but it's probably the biggest cessation year that we've ever had, at nearly 350 billion. So next year will be lower, but it's still going to be a 450 billion market if you include product transfers. It's going to be fairly flattish on purchase and remortgage. So you might end up looking at, what did your business look like in 2019? That's what your business is potentially going to look like next year. So as Vikki says, what's your cost base on that? How do you manage? And making sure that you've got that flex ready is really important.
Brilliant. Look, just summarise on a few key points that I've just made a note of it for me. So, look, embrace consumer duty. It's got to focus on delivering outstanding customer outcomes. If we deliver outstanding customer outcomes, then it creates goodwill, it creates cross-sale opportunities. And if we can't actually deliver the solution ourselves for whatever reason, then act as that quarterback to facilitate the opportunities so the solution is delivered. So don't miss out on the opportunity. I think conversation, everybody agrees, is good. There's lots of conversation opportunities, and that engagement, should deliver an opportunity to talk about potential needs. I loved a few of the points around supporting your local markets, using social media, be the business of choice. So really work hard to just farm your existing clients, but just be that go-to advisor in your local areas. We all agree that the specialist market, I think, is going to offer opportunity next year, which again I think is evident from the different cycles we've seen, and technology can play a part in enabling efficiencies. And although we've seen some improvement, we've still got a way to go, and there's still so many moving parts, but there will be some efficiencies, whatever they'll be in 2024. Data seems to be a real key point as well. So just valuing that data, valuing that relationship, using that data, using that customer opportunity that exists seems also to be a crucial element. And I love this, the perspective. So let's not always compare year on year. We've got a marketplace that is with an increased amount of specialists next year, and we've got 90% of it being intermediary focus, which has to be a good thing for all of us and all our distributions. Was there anything question-wise that maybe I've not asked, or any final point anybody wanted to make about next year? So was there anything, just a final point to make?
People need advice. People are confused. There's so much happening in the market. As we've all said, 90+% is intermediated now. Just make sure that you are there and you're there to give that advice. And as I said earlier, you can't over communicate to your customers at the moment. They'll thank you for it.
Yeah. Vikki, any final last point?
Be open-minded to lots of different types of customers. Be that broker of choice in your local area, and just take every opportunity and maximise every single opportunity that comes through your door now and obviously into 2024.
Thanks. Listen, many thanks, guys. Really appreciate your time today. Thanks for getting in theme, as I say, with the Christmas jumpers. Have an amazing Christmas. let's have a restful Christmas, because again, I know you worked incredibly hard as we've gone through this year. But thanks for your time today, and thanks for sharing those pearls of wisdom as we've gone through the conversation. So thank you all.
Cheers all.
See you
Bye.
Bye, guys.
Bye.
Bye. Bye.